Hello everyone. Today let's look at Eicher Motors. So today they have shared their quarterly results and the stock is at all-time high. So if you look at the present value of the stock is 7,771. So if you see this is a large cap stock with the 2 lakh 13,000 crores of market cap. The PE is at 39.5. ROC is at 29.8 and ROE at 24.1, and debt to equity ratio is negligible 0.02. Price to book value is on higher side 9.65. Now let's look into how this has done in last 5 years. So here you can see this stock has risen from very good levels of 2500 to around 7700 levels at present. And uh, if you see, there is a clear trend that whenever it is cutting the 50-day moving average line, this is giving a good return. So for 200 moving day line, if you see, since last 1 year, you can say this hasn't touched even the 200 moving days. Just at the start last year, then it has not been near to the 200-day moving line. Now let's look into the peer comparison. So here, Eicher Motor PE is at 40, almost 40. For the rest of the two-wheeler business, Bajaj Auto is at 30, TVS is at higher side of 62, and Hero MotoCorp is at 20.5. The most important thing over here is the operating margin of Eicher Motors. So it is at 24.5. So it is way ahead of other peers, and that is why I think it is getting this kind of valuations. Now let's look into the quarterly results. So here also, if you see, the quarterly results are very good. The sales has gone up from 3,700 to 6,000 crores. Also, the operating margins have improved from 23 to almost 25. Basically, it has remained consistent throughout. Also, the EPS that has gone up from 27, 33, 37, 36, 40, 50, and 51. So that has also increased quarterly. Also, the net profits which we see, which were declared, those are on a very good numbers, around 1400 net profit. The profit before tax is at around 1800 crores. So the operating margins are pretty consistent, and we don't see any uh, big change that can take place about these. So yeah, like this is one thing. Then if you look at the profit and loss statement, uh, in December 23, the net profit was of around 525 crore. From there, it has gone up to 4,700 crores. So almost 10 times the net profit has gone up. The sales has gone up from 6,800 to 18,800. The main reason for this is the operating margins you can see. Okay. Now, if you look at the stock performance, for 10 years, it has given 16% CAGR, 1 year at 56%, 3 years at 34%. And the sales growth is also good at 26%. The 3 years profit growth is 41%. So overall, on profit and loss side, the sales side, it has given good returns. The balance sheet, if you see, the borrowings are very less. The reserves have gone up. So this is pretty good balance sheet. Also, the cash flows from the operating activity have been positive and increasing since last 5 years. And now if you look at the shareholding pattern, that has also been consistent for last 4 years or 3 years, you can say, from March 23 to December 25. Promoters levels are at 49%. FIs have remained almost consistent. DIs have increased from 11.19 to 14.64, and public has reduced from 10.8 to 9. So overall, the shareholding pattern is also good. Now, I have tried to do some other research on this also. If we could get some red flags about this company, that's how I asked this screener. And this is a paid version, so I asked for potential red flags in this company. So there is nothing striking or very worrisome about this company when this was run. So first they have stated is the frequent GST or tax demands. Those are not much. You can see for December 29 VECV. So it is a joint venture between Volvo and Eicher. So they have some tax GST demand. Then e-way bill unloading mismatch. Then second is related party transactions. This is also not worrisome, around 250 crores purchases in services. So that is not a worry. The key personnel changes, it's Mario LVC has resigned from Chief Growth Officer for EVs. So EVs is an important segment. So this is an important change, not a red fact, but a change. And there was some recalls of the reflector replacement, but like not much of a worry over here. Then joint venture issues. This is the earlier issue which they had with Polaris under liquidation, and they have kept this 325 crores in impairment. So no further losses over here. And also, if we compare it with the industry or the business risk, competition is rising in 250 or 750cc bikes. The regulatory framework, the emission norms, those are being tightened, and also the GST hikes. So for above 350cc, it is 28% GST. Also, the export share is at lower side of 10 to 13%. That it is most dependent on the domestic side. And also the EV transition has limited volume. So all in all, there are no worrisome, nothing worrisome, but yeah, like these were few highlights that I could get it from using this. Now, if you look at the chart for last 6 months, so for 6 months, it has touched 50 DMA twice, nowhere near to the 200 DMA. Even for 1 year, we have seen 3 year. If you see, it had touched the 200 moving average. So what I would suggest is wait till it comes at least to 50 DMA. If it comes near to 50 DMA, it can be a good buy, but would request you to do your own due diligence before investing. This is just an educational video. Okay, do like, share, and subscribe to my channel. Thank you.